East and West Learning Connections
East and West Learning Connections
helps people of different cultures break barriers and connect with each other.
Together, let's make learning and connections happen.
So, it's my honor to welcome Martin come back to give us a series lecture on entrepreneurship in Canada. So today, Martin is a very seasoned business person and great mentor for many startups, for many companies. He is experienced and uh, he's generous enough to provide this wonderful program for us for all free. Without further ado, I welcome Martin to give a talk on business structures and legal stuff. Thank you.
Thank you, Frank, and thank you for your continued support and guidance and help with delivering these lectures on entrepreneurship. And thank you always to Young for her incredible leadership of East and West Learning. She's an inspiration, I think, to all of us, and we're very thankful to be part of her organization and continue to provide whatever education we can. So tonight's lecture is on the topic of business structures and legal basics in Canada. So if there is anybody that wants to, the general format that we follow is that I'll do the presentation followed by a question period. Tonight's going to be a little bit different in that because the topic of business structures and legal basics in Canada is somewhat a little bit on the more technical and I'd call it more boring side for many of you, especially ones who have already been through and know how to open a business. I'm going to throw in a little bit of the beginning of our next lecture, which is entitled Business Planning and Strategy. And I'm going to specifically more gear the end of this presentation to business strategies. And the reason I say this is we could probably talk about business strategies at every single lecture because I don't think we can repeat ideas and strategies enough times. I think if we did it all the time, it still wouldn't be enough. So we'll start tonight with just some fun stuff, some of the strategies that we might use once we get through the business structures and legal basics. We'll then have question and answer period. Once that's done, assuming time still permits, which there should be, we'll start to talk a little bit about business strategies and some of the fun stuff about how once you've got your business going, what are the sort of key ingredients to some strategies that you should be looking at in order to very quickly grow your business exponentially. So tonight I'll start again with business structures and legal basics in Canada. And the goal basically is so that you understand how to legally start and structure a business in Canada. That's really the essence of the first part of the presentation tonight. So to start with, there are really four types of structures you can have. You can be a proprietorship, a partnership, a corporation, or a cooperative. And we're not going to discuss the fourth one at all tonight because argumentatively it probably won't affect any of you going into your business. And if you did want to discuss opening a cooperative, I'd certainly be happy to do that on an individual basis. But there'll be very few, if any, that will want to go down that road. So let's talk a little bit about sole proprietorship to begin with. What are the pros, the advantages of a sole proprietorship? It's very easy. It's low cost. And basically, you as an individual have full control of your business. So that's the plus side. The real downside of a sole proprietorship is the personal liability for the debts. And that would include, as an example, if God forbid somebody, is in your shop or in a area where you're conducting your business and they follow. The bottom line is you do have personal liability and you can be, if somebody chooses to create a lawsuit against you, they actually can sue you personally. So you really don't have the protection in place. But that's also something that you should be discussing, possibly with an insurance agent, with a lawyer, an accountant. But basically, the real problem with a sole proprietorship is that you have obviously have personal liability. So there is some exposure there that you want to avoid if you can. Let's move on to the next thing, the next structure, which is a partnership. Partnership is obviously two or more people. The nice part of a partnership and the pros of a partnership is that you have shared costs. So if you wanted to open something, obviously, if you have three people, it's only going to cost you a third of the amount to get into that business. Equally, when you make money, assuming that you do, you'll only get a third. So, but at least getting started, it does give you shared costs. And the other thing about a partnership, similar to a sole proprietorship, is it's a very simple setup. So that's the plus side of a partnership. The negative side of a partnership is again is the liability, is that you have this share, although the liability is now shared amongst two or three or four people. So it's better than just having complete personal liability, 100%. So you do have shared liability, but nevertheless, you still have that liability exposure. And the other problem with a partnership, and I think some of you will probably smile when I say this, is the potential for disputes amongst the partners. Partnership is exactly almost a mirror image of a marriage. There are two types of partnerships you have in life. One is probably your marriage or your partner, and the other one is your business partner, your personal partner and your business partner. So, and sometimes and by the way, sometimes they're one and the same. But even if they're separate, sometimes a business relationship and a personal relationship have a lot of similarities. The ups and downs, the differences in personalities, the differences in behavior. So when choosing a partner in business, you almost have to have the same kind of fortitude um, and energy and time commitment put into that decision as you do if you were literally getting married. So you really have to make sure that your partner is the right fit for you. The other thing about a partner, and I used to say it this way, is that if you choose somebody who is exactly like you, then the argument would be that one plus one, in other words, an identical person plus an identical person, one plus one, the best you can get out of that is two, right? One plus one is two. Sometimes by choosing somebody who you get along with, but has very, very different skill sets, one and one can equal three. So, my advice and suggestion, if you're looking to do a partnership, is to look for somebody that you get along with exceedingly well, but at the same time has very separate and distinct different abilities. As an example, I was one of the companies I mentored who I was speaking with today. You have a male and a female partner, in which the male partner is a very much so a CEO type, very, very disciplined, very coordinated, very administrative oriented, really conducts and runs a really solid business. And his female counterpart happens to be really, really good at sales and marketing, and she brings that to the table, but they get along incredibly well. So think about if you're doing a partnership, just remember you have shared liability, but you also have potential disputes. So you want to look for somebody who's similar, but with very different abilities, so that the hope would be is that you complement each other to create one plus one equaling three. The final structure is something called a corporation. The nice thing, very good thing about a corporation is you have limited liability and definitely some tax advantages. And Frank and I were talking a little earlier about, tax. And you definitely have tax advantages with the corporations, a variety of them. And so those are the advantages. And the other real advantage is, as I said earlier, the limited liability in that in Ontario, in Canada, you really can't pierce what they call the corporate shell. So if there's a lawsuit, if the company does something wrong, in general, and by the way, this is the 80-20 rule. 80% of the time, if somebody sues you, they would be suing the corporation, not you as an individual. So, in a lot of cases, that provides a lot of protection for you at a personal level. There are certain instances where somebody can pierce the corporate shell and go beyond just suing the corporation and also sue you, but they are limited and you're certainly more protected being a corporation. The negative side to a corporation is it is considerable more paperwork and there are higher costs for a variety of reasons. Obviously, you're a corporation, you have to have all kinds of filings, both from an accounting perspective, you have to set up yourself properly legally, et cetera, et cetera. So the costs are definitely higher being a corporation. So moving on from there, let's talk a little bit about the key legal steps to starting a business. So the first thing you want to do when you start a business is obviously choose a business name, and that means choosing a domain and an IP address. And often people confuse domain with IP, and to be very succinct, the domain is generally the name that you choose. In other words, it would be Martin's Cookie Shop. Underneath that domain is what's called an IP address, and usually that's a numerical address that sits underneath the name domain. So your domain name could be Martin's Cookies, but underneath that it'll be a numerical kind of 72176, .com kind of scenario. So you want to make sure that you choose your business name carefully. Make sure that it's unique, that it's not already in use. And you can use companies like GoDaddy or WordPress. There's several others. Just search domain search, and there'll be all kinds of companies that come up. And you can do a search on these names, as I'm sure a lot of you are familiar. You search the name, you search the extension. Usually, and this is just usually, .com is the preferred. And a lot of people ask me, well, why .com? Why not .ca or .ai? Well, firstly, a lot depends on your business. If your business is really engaged in artificial intelligence, you might want to choose .ai. But in general, .com is best. And it's for a variety of reasons, but one of the most ones in particular is for the purpose of search, SEO, search engine optimization. From the perspective of SEO, a .com is a much more searchable entity than many of the other domains. So that's one of the reasons you want to choose it, is if your business is dependent upon people finding you through the internet, .com is usually the best way to go. The second thing you want to do is you want to register your business. And you want to register your business federally if it's Canada-wide, or you want to register it provincially if it's within your province, right? Now, sole proprietors may not need to register if you're using your personal name. So as an example, if I was using Martin Copeland's cookie machine or something like that, there's a possibility that I may not have to register. That's a little bit more of a iffy question, but in general, as long as you're using your personal name, you have the right to use that and not register for a business. The third thing would be is to get a business number. And that's required for taxes, it's required for hiring, and it's required if you are incorporating. Okay, so that's the third thing. The fourth thing you would need to do is to register for GST and HST. And you're only required to register for GST and HST if you earn over $30,000 annual. So if your revenue is over $30,000 in revenue, it is a legal requirement that you have to register. And basically what you do is you register your company as a company, you register for GST and HST. And basically GST and HST works very simply. You basically, every time you charge a customer, you collect GST. And every time you pay a supplier, you pay GST. And basically what you need to do with the government is you basically take all of the GST you collected, But now, as a business, you're allowed to subtract all the GST that you paid as a supplier, and you only pay the difference. So if your revenue for the year resulted in, let's say, $10,000 collected in GST, but to buy all your products, your services, or whatever you're selling to somebody cost you $5,000 that you've paid out of your pocket, you're allowed to deduct that to 10,000 minus the 5,000. You only pay the difference of $5,000 to the government. So there are some key advantages here in having a business, in that you effectively, the net result is that when you buy your supplies and when you buy your goods to service your clients, you're basically buying them GST exempt and selling them to your customers at the other end. So again, if you have any questions on any of this, when we get to question period, just mark them down. You can ask them then. Now let's just start about to register a business in Ontario. You will use the Ontario Business Registry, and that's accessible through the provincial government's Service Ontario platform. I think most of you are familiar with Service Ontario. That's the platform that you go to. So let's talk a little bit about the key resources that you have as a business. So the first resource you have is the Ontario Business Registry. And this is the official site. The Ontario Business Registry is the official site for registering or incorporating a business in Ontario. And it handles the transactions like your business name registration, your filings for sole proprietorships, your partnerships, corporations, and more. So your one key resource to start with is the Ontario Business Registry. The next one, as previously mentioned, is Service Ontario. And Service Ontario, what you would do is you would go into Service Ontario and then look under Business Services. And then Service Ontario is obviously the provincial government's main portal for many core services, including business services. And you will use that to access, as I mentioned earlier, the Ontario Business Registry, create accounts, and complete your registration. Then, of course, as we all know, there's the CRA, the Canada Revenue Agency, and they have something called the Business Registration Online, which its acronym is BRO, B-R-O. And so while it's not necessarily specific to the Ontario Registry, after you get a business number from CRA, you will then register your key federal accounts like GST, payroll, etc., through the BRO, including transfers to provincial registries such as Ontario. So those are the essential key resources that you'll need to know. So let me just summarize a little bit before we get into questions. Let me give you a brief summary of the what to do and the step-by-step when starting your own business. So firstly, decide upon your business structure. Choose whether you want a sole proprietorship, a partnership, or a corporation. As I mentioned earlier, each has different legal and administrative requirements. Second, access Service Ontario. Visit the Service Ontario's online portal. It's, I think it's ontario.ca, and then navigate to Business Services, the Business Services section, and that will launch you into the Ontario Business Registry. Third thing to do, register your business. So for sole proprietorships or partnerships using a trade or business name, you will obtain what's called a master business license. For corporations, it's a little different. You'll file your articles of incorporation, and you may also need to do, and I think there's a cost to it. I'm not sure that's that expensive. I think it's $50 or $100. You might need to do what's called a nuance name search. Nuance is spelled N-U-A-N-S, a nuance name search, if you're using a name rather than a numbered company. So you'll have to check that it's not in use by somebody else. The fourth thing you'll do is you'll complete your registration and obtain your Ontario business number, better known as a BIN, B-I-N. And after registering, you will receive a 9-digit Ontario Business Identification Number, which is used for your provincial filings and may also be needed when registering for your federal accounts with the CRA. The fifth thing you'll do is you'll register for CRA program accounts. So you'll use the CRA's business registration online, which is the BRO, the BRO, to register for GST, HST, payroll deductions, corporate tax, etc. Also, the BRO also allows you to transfer to your provincial registry like Ontario's. Okay. And finally, the number six thing is you will have to check licenses and permits. So depending on what your business activity is, you may or may not need additional municipal, provincial, or even federal permits. You use something called BizPal. That's BIZPAL, BizPal, and which provides a customized checklist based on your business and your location. So you'll go into the the licenses, permits, and zoning section, and you'll use BizPal to find out whatever permits you need. So let me give you some example, is you'll be able to check city bylaws, like if you're working from home, things like about signage, customer visits, etc. Like if you live in a condo and you're having regular customer visits, if you want to put a sign in the front of, even though you're living in your home, but you want to put a sign up, Martin's Cookies, are you able to put a sign up or not? So those are the type of things you might need licenses or permits or zoning for, and you'll be able to use bizpal.ca to do that. So let's talk a little bit about taxes and responsibilities, okay? Um, on sole proprietorships, you report your business income on your personal tax return. So I'll repeat that again. If you open a sole proprietorship, basically all your revenue, expenses, etc., go through same as when you do your personal income tax return. You report your business income on your personal tax return. If you're a corporation, you file a separate tax return called a T2. That's T as in Tom, 2. So any corporation has to file a T2, and the highly recommend at that point is you would want to hire an accountant to make sure that you stay compliant and also so that you save on taxes. If you remember at the very beginning, I said one of the advantages of corporations is there's certain tax advantages. So you want to have a really good accountant that can not only keep you compliant, but will also help you save on taxes when you do your T2, your tax return. Also, remember you've got to collect your GST if you're earning over $30,000. And one other thing of note, which you need to know, is you need to keep your records for 6 years. You can't just do your returns and toss the information out. So you do need to keep your records. It's a legal requirement for a minimum of 6 years. Let me talk a little bit about legal protections as well, because we've talked a little bit about tax. Let's talk about legal protections. It is really, really important in Canada, I would say in North America, um, that you use written contracts. That's not only with your clients, but also with your suppliers and importantly, especially today, your staff. So you want to have an employer employment agreement with your staff. You want to have a contractual arrangement with your suppliers, and you want to have a contract with your clients. And it will cover off a host of things. I could spend quite a bit of time on this, but you could have a host of things. So, including things like termination, including things like non-competes, um, a variety of different things. Now, a lot of people recently have asked me, well, if I'm going to do written contracts, they can be expensive. Can I use artificial intelligence to do these? And the answer is yes. So here's my advice at the current time. Probably in a year from now, it will change my advice would have been different a year prior to this. But at the current time, right now, the advice I would give you is this. If you need to get written contracts for your clients, suppliers, and staff, it can be very expensive. And if you go to a lawyer, and let's say every time you do a contract, for argument's sake, they were charging you $2,000, that can really start to add up. So one of the ways in which you can be compliant yet save a lot of money is you could use artificial intelligence to generate these contracts for you. However, what I would say is use AI to generate the contracts. Great idea. Make sure when you're using AI that you continue to ask AI is this contract that we've just done, is it all inclusive? Are there other things I can add to it? So you want to keep going back to your AI so you can complete a really good contract that includes all of the good things that you have to have in your agreement, which are arbitration, mediation, termination. You can't pluck employees from old accounts. You can't. It has to have your termination clauses. It has to have an expiry date. It has to have a beginning date. It has to have the terms that you set up for payment, whether it's net 30 days. All these kinds of things you have to have in an agreement. So if you use AI to create that agreement, what you could do is make an arrangement with your lawyer rather than your lawyer start it from scratch. You could say to your lawyer, look, I'm going to create the contract myself and put everything into it I can think of. But what I would like to do is then provide it to you for the final edits and approval to make sure that it's a proper, legal, and compliant contract. In that case, because you've done most of the work, the lawyer may only charge you 20 or 25% of the cost than as if that lawyer had originated it. So what a lot of people today are saying, instead of paying, let's say, $2,000 to create a contract, they will create their own and then send it to the lawyer for maybe $400 or $500 or $300 and get them to sort of make it compliant and give lawyers approval that, yeah, it's a good contract to send. So that way you can keep the lawyers in business, but at the same time, save a whole host of money for the times that you may need them for much more important things. So I hope that all makes sense. But that's what I would do in terms of contracts. The other thing that you want to do, and this is really important, is consider getting business insurance for your liability and property damage. Okay, so I'll say it again, consider getting business insurance. It's really important to have that, particularly on third-party liability as well. So make sure you get your property damage as well as your third-party liability, your regular liability covered off through some decent business insurance. And the business insurance, by comparison to other types of insurance, is not crazily expensive. It's usually pretty good. So try to get the biggest bang for the buck. Look at, go through all the different terms of the insurance policy that you're provided with, and look and see the things that are most important to you. There's certain things that you may need. There's certain things you can drop. So pick out the 3 or 4 most important things. And if it's too expensive for you, just drop the things that are least important. But I would say that liability and property damage are kind of up there with oxygen. They're really important. Those are the 2 principal things you want to have. Lastly, is you want to register any trademarks or inventions that you may make through what's called CIPO, which is the Canadian Intellectual Property Office. Of course, it's a different office if you're going to the United States. They have their own patent and trade office there. But in Canada, the Canadian Intellectual Property Office is where you register trademarks and inventions, and you go through them to do that. So if you do want to register a trademark, be really important to make sure you do that. Lastly, we'll talk a little bit about immigration and business ownership. It's relatively simple. If you are a permanent resident or a citizen of Canada, you have the legal right to fully own a Canadian business. If you are a temporary resident, all I can tell you is you need to check the restrictions and or consult with an immigration lawyer. I can't give you that advice because it could vary province to province. It can also vary country to country. You really need to just make a quick phone call. And I would tell you that you can probably use AI to figure out most of it. Put in, your situation, do a check with AI, but I would also make that check to either a consultant or an immigration lawyer. Typically, if you're just making a phone call to do a quick check, they probably won't charge you anything, thinking that once they give you that initial piece of advice, maybe they will use you for further work, and therefore they'll give you the initial advice for free. So basically, in a nutshell, that really covers off. I said it would be relatively quick, about half an hour. That really covers off the business structures and legal basics in Canada. And what I'd like to do at this point is to open this up for any questions, comments, or concerns that you have. And following that, we'll have some fun if time permits and everyone wants to hang in there a little bit. We'll have some fun talking about some business strategies, which is really what I like to much more enjoy doing because that's all about creating revenue for your business and the strategies in which you would use to create that revenue. So at this point, let's open it up for any questions, and I'll turn it over to Frank to moderate this.
Yeah, questions are welcome.
And I guess you could ask your questions by just unmuting. I think they can unmute themselves and just ask the question, or you could probably do it through the chat. And I guess, Frank, you could monitor the chat and make sure.
Yes.
Okay. So either I was terribly succinct and very good at, delivering the information, or terribly bad. One of those two things. Because so far there's no questions.
Hi, Martin. Can I ask a question? Yeah, thank you very much for your information. It's very valuable. And yeah, so I've registered as a incorporation in Ontario, and I do have a business number and HST GST number via CIA to CRA.
Yes.
So my question is, like, I haven't figured out what's the requirement to sell services and products, especially digital products, through different province. Is that a requirement to register again, or is that the
It's a great question. It's a great question. So you can be an Ontario-based company, and you could sell it to anybody in the world. The question really is that when you sell something in Ontario, you have to charge, the 13%, collect that and remit it. The question then becomes if you sell outside of Ontario, right? So what we're going to start to get into is a little bit of questions maybe beyond tonight, but in general terms, if you're selling outside of Ontario, you still need to charge tax, you still need to collect tax, and you still need to remit tax. So the answer to the question is, yeah, you do need to charge tax. Now, there will be certain, and very, very few, there are some certain select services that are not taxable. So again, I would use AI depending on what your product is, just to look up and say, hey, I'm a consultant. Do I need to charge GST to my clients? And you probably get a pretty good answer that way. So some services, very few, might find an exemption, but for most products, when in doubt, charge tax. That's the bottom line. When in doubt, charge tax, collect it, remit it. Because remember, whatever you charge, it's just going to the government less whatever you've paid out. So if you paid out GST to run your company, whatever you buy, and that includes, as an example, when you buy a computer, when you buy an LCD screen, anything that you buy that's a necessity to run your business, keep those receipts, okay? First of all, they're expenses, making them tax deductible. And in addition to that, that 13% you paid, you get back, because when you charge your customers that 13%, you will deduct that 13% that you paid. So in answer to your question, when you're outside of Ontario in Canada, you should be charging that tax and remitting it. If you're going into the United States, that's a different discussion. Also, I'm happy if you want to connect with me offline. You can get my email, send me directly, and I'm happy to sit down and have a session with you, use a little bit of AI, and answer those questions more succinctly if you're talking about selling into the US or you're selling into Australia, that type of thing. The rules may be a little bit different, and we'll have to address those through maybe a separate conversation with me. I hope that helps a little bit.
Yeah, thank you very much. So I think in the selling to the US, it's zero tax. Is that?
So it can be there. The U.S. is a whole it's a much trickier question. Uh, it's a much trickier question. Actually, if you want to talk about the U.S., we'd almost be better off taking that offline because I ran a significantly large company in the U.S. for years, since basically 1987. The rules changed a little bit here and there. A little bit depends on the state you're selling into. A little bit depends on there is a universal reciprocal arrangement between the US and Canada. So, as an example, even when you are taxed by the US or you're taxed by Canada, there's a reciprocal arrangement that if you're taxed in one country, you still have to pay taxes in both countries. But if you're taxed in one, you declare that, and that it becomes a deduction in that country. So you have what's called reciprocity between the two countries. So you're only technically taxed once. You sort of pay both taxes, but then you get one back. So it depends if you're talking about the selling side of things or paying tax at the end of the year. There's also something, and mark this down, it's called transfer pricing. And transfer pricing, again, this is a much larger topic. I'm very happy to discuss this with you, but 99% of the people on this call won't be dealing with transfer pricing. But transfer pricing is it's a it's an art more than it is a science. And transfer pricing is the amount of money, the amount of revenue that you typically would take in, and the amount of expenses that you would apply against that revenue in both countries and how that compares. And you have to do, arguably, what you have to do, especially if you're incorporated in both countries, you're actually required to do. I'm going to tell you that 99% of people don't know this, but I'm part of that 1% that does. If you have corporations in both companies, you have to do a transfer pricing study, and you have to basically maintain this study and prove to both governments that you are fit on a fair basis. You are collecting revenue in both countries, and you are expensing in both countries at a fair and considerable rate on both sides of the border. And when you file your taxes, you use the transfer pricing study effectively to say, hey, I'm not collecting all my money in the US and expensing everything up in Canada because I have a tax advantage, right? If you do that, the government, both the IRS and CRA, can come back at you. So it's really important to do a transfer pricing study. And again, that's only if you're incorporated in the US and here. It's different if you're just in Ontario, only selling into the US. So in a very long-winded way, I'm saying to you, contact me offline, and we can sit down. I'll be happy to give you some time, and we can go through best strategies for your company in terms of your selling outside of Ontario and how you collect your taxes, and also whether you incorporate in more than just Ontario. And we have that discussion because it's a tricky one, but the good news is I have the answers to most of your questions. I hope
Yeah,
that
thank you
I hope
very
that
much.
helps a
I will
little bit.
definitely contact you. And I have another maybe it's yeah, second question, then I will maybe leave the time for others. So when we incorporate, so there was a time we can track back to count the expense. Is that right? The expense that we
Yeah, you can go back. I forget exactly the duration, but if you had expenses in setting up and it was, more than a year ago, I should know this. It's just been a long time. But it's easily answered. But the answer to your question is again, I'd say with 99% certainty, you can definitely go backwards. I think it's a few years, something like that. And any expenses you had in terms of setting up your company, you can apply that in this year's revenue, against this year's revenue.
Okay, thank you. Thank you very much.
Oh, my
Martin,
pleasure.
Martin,
Yes.
I have a question in the chat. Ask, can you explain the benefits of a .com or .ca domain? What are the potential issues with .ca can run into over .com domain? Thank you. Yeah.
Okay, another great question. So I would say the first thing you need to look at is the importance of the branding of your business, more important than SEO or anything else. If you are a Canadian company and your plan is to sell only in Canada, .ca is a great alternative to .com because first of all, pretty much everybody in Canada knows .ca, so there's no distinct advantage of having a .com. And the other thing about a .ca is you're going to find a tremendous more flexibility in terms of being able to get a domain and get a domain at a much lower cost. So the advantages are A, you're going to have much more flexibility in getting the domain you want because the .coms are sometimes really tough to get. But often you'll see when you do a search for Martin's Cookies, you'll see .com is almost always gone, but the .ca is almost always available. So the availability of the domain and IP obviously is much greater with .ca. So that's the first thing. The second thing is if you're just in Canada, great advantages. .ca will almost identify you as a Canadian company, and I guess there is, some loyalty out there to Canadians buying Canadian, so you can take advantage of that as well. So .ca is a really good choice if you're a Canadian company selling in Canada. For those reasons, the only negative, and I'd say it's a very minor negative, is SEO, which is search engine optimization. The internet tends to prioritize .com domain over all other domains. Probably nobody will ever come out and actually tell you that, but the fact of the matter is we have abundant evidence to support the fact that when you're doing a search, the .coms are simply going to come up before the anything else. So that would be the pluses and minuses of .com. Now, the major advantage of .com is SEO because, again, search engine optimization, .coms are usually going to come up first. The other major advantage is it is by far the most universally recognized domain. So if you're a .com, it's almost an expression. It's almost a badge, if you will, of saying we are a real company because we're a .com company, and that means we're worldwide. We operate everywhere. So .com has that very distinct advantage of being considered to be kind of the prime domain name with the best SEO. But again, not necessarily if you're a Canadian company doing business in Canada, or if you're an Australian company doing business in Canada, that's what really depends. Does that answer that question fully enough for you?
Absolutely. Thank you so much.
Okay, pleasure.
Let me add on to the question. If there's a newer domain like .net, .ai, anything like .us,
Yeah.
Any comments on that? Yeah.
It's going to be basically the same answer. I mean, if you look at something like a .us as an example, it's just from a perspective of a client, right? What you got to remember is a lot of people in their business don't even give the extensions anymore. They just say, "Hey, my internet domain is Martin's Cookies. Look me up." It's assumed the minute I say Martin's Cookies that it's a .com. So when you are a different domain, the issue you have is branding. You're always going to have to tell that person, by the way, it's martincookies.us, right? So if you're the type of company that's more, I'd argue, B2B, business to business, as opposed to B2C, which is business to consumer, B2B, you might get away a little bit more. You're going to send out information. You're still trying to brand your company, but people are going to reply to your email anyways. Does it really matter? It's a .us. How many people on a B2B basis are actually going to go to your website versus, let's say, B2C? So if I'm B2C and I'm selling to thousands of people, that's really where the extension comes into play because people are going to look and say, well, if I'm going to go to Apple, Apple doesn't have to say we're apple.com, right? Everybody will assume Apple is apple.com. But if you were apple.us, and you're B2C and you're relying upon thousands of customers, you're going to create a problem from a branding perspective unless you can come up with some really fun thing that goes viral and you can somehow get that US, that .us to work for you in the brand, which is something along the lines of it's Martin Cookies baked in the US, only for the US with the domain .us, something along those lines, some fun thing where you brand it and go viral with it in such a way. But 80/20 rule, .com is always going to be your best. Anything like .net, anything other than .com, quite frankly. .ai is a little different. A little tiny Caribbean island did very well by choosing that, and they're making millions of dollars a year. The fact that they were smart enough to grab that. But the fact of the matter is, .ai is actually building some real steam right now, and that people now identify when they see .ai, they will recognize you somewhat as an AI company. So there is, with certain domains, especially if you're in the AI business, having a .ai could be an advantage. Could be. I still go back to nothing beats .com, but you could look at these others. But again, search engine optimization, each time you drop down a domain that's more infrequently used, you're dropping down in SEO, right? The other thing is in branding, each time you use one, you're dropping down in branding. So if you can figure out a way to brand, and if search engine optimization isn't that important to you, and if you are, let's say for argument's sake, you're even higher level than a B2B, you only have 10 customers. Let's say you're in the business of IT, and you provide the services of supporting banks, and you only have 6 customers. Does it really matter that you're a .ca or .net? Probably not. So a lot depends on your number of customers, the importance of branding, the importance of SEO. That's the kind of things you want to look at. But again, nothing beats a .com. So I hope that answers your question.
Let me, I just cannot get over this one. If a small company, the domain name you're interested is taken, you want to buy that domain name from someone.
Yes.
You rather buy before you become a bigger fish, or you want to buy, what time, what's it?
What's your time? You want to buy it now or buy it later?
Yeah.
Okay. So that's a real interesting question, because usually at the beginning you have limited resources, right? So the question is, do you want to spend a whole bunch of money and find out if your plan doesn't work, or do you want to try and create your business to become such a big business that you can afford to buy it at a later point when it's more expensive? Is that really the
ask for
question?
more, whole lot more?
Yeah, for a lot more. So we actually, once we got acquired, then it was an interesting story, which I'll share with you, which could kind of answer that question. We actually purchased a domain as a company. We were acquired, and the new entity, we purchased a domain for $750,000 back in 2012, and it ended up being a flop. And fortunately enough, we found somebody else who basically paid us the $750,000 that we put out. So one thing to remember is, if something's worth, it's like a house. If something's worth $5,000 today and you own the domain, there's an argument to be said. It may be an investment, right? Think of all of the people when domain names first came out. Think of the companies that made businesses out of going out and buying all the domains they could so that they could sell them at a higher price later on. There was a ton of businesses that did that, and they made millions of dollars. So one thing to remember is that a domain is an asset, and it's a saleable asset. So if you buy it, the chances are you can sell it as long as you can find a buyer. It's like, I can say to you, if you buy a house, you can always sell it. Sometimes it's at a loss, and sometimes it's at a major gain. right? And that all depends a lot on what happens out in the world today. So if you happen to go out there and buy a product, or sorry, if you sell a product, and let's say for argument's sake, you're selling sailboats, right? And you pick a name like Albacore, sailboats. And so you get albacore.com. So everybody knows if you're going to buy an albacore boat, you buy albacore.com and you go there and you buy your boat. And all of a sudden, it turns out that many years later, Albacore becomes the brand name of something that Apple's selling. Well, guess what? You're probably looking at an early retirement because Apple's going to come along and say, we didn't know albacore.com's gone. We're willing to pay 500 million for it, right? Because it's going to be worth 5 billion to us. So domain names are a little bit like homes, a little bit like real estate, any asset. It has value. It can go up in value, it go down in value. Do you buy it early? Would you go out and buy the bigger house now, hoping it will go up, only to find out it goes down? Or would you wait until you've made enough money to buy the bigger house? It's almost the same question, right? So it's like the same question of any asset. Do you buy low and try and sell high, only to find out you have to sell lower? Or do you buy when you can afford it and you have the money in the bank, and be a little bit more conservative, right? Um, I would say in most cases, the other thing I should mention, this is what I forgot to say. When you go and get a domain, try to wrap up all of the extensions that you can get. So as an example, if you find, let's say you find something that's called, of course this one will be gone, but if you found marketing.com and it became available, one of the things you want to do is don't just take marketing.com. Take marketing.net, marketing.ca, because what this does is you basically tie up the entire IP, the entire domain. What you don't want to have happen is you take, marketing.com and somebody in Canada comes along and registers marketing.ca, right? So it's really important to tie up whatever domain you pick, make sure you tie it up under all the extensions, as many as you can get. The other thing when looking at domains is sometimes you can't get the exact domain you want. Like let's say you want to you want to open a company called Cookies for You. Well, you could do cookies, FOUR, for you, which is being more of a Canadian thing. You could do cookies, FOR, might be a more American thing. You could also do cookies and then use the number 4, so you could do Martin or cookies, the number 4, you. You could also do cookies, the number 4, and the lowercase letter u, right? So there's 101 ways to get the domain you want, but when you get it, make sure you tie up all the extensions related to that domain. So I hope that covers off enough on domain tonight, but I'm happy to answer any more questions.
Thank you so much. That's extensive. Here I have a question from the chat. Ask question. The question is what materials you need to prepare for register a company. When you register a company, is there a checklist for material you need to bring? Yeah.
Yeah, so I think the best way to explain that is if you go back to the step-by-step approach that I told you. It is a relatively easy. Once you get into it, it's daunting right now. Believe me, when I first did my business back in the days, in the analog days, long, long before there was internet. Goes back into probably the late 70s. I always like to say in the late 70s, I was 5 years old, but I'm not getting away with that anymore. But back in the late 70s, early 80s, I used to co-author a course it was at Seneca called How to Start Your Own Business with Richard Smith. And he's still around these days. I haven't spoken to him in 40 years, but he's still around doing the same thing. And we did it more manually, more analog. We actually had a book produced of, steps, step 1, 2, 3, 4, 5. But today, because of the internet, it's so much easier. So again, just to go back over it, the thing to do is firstly decide, I'll just do this real quickly, decide on your business structure. That's the most important thing to start with: proprietorship, partnership, corporation. Then what you want to do is go into Service Ontario. It really gives you the step by step. If you go into the Ontario Business Registry, just go in there. It will tell you step by step. You just fill it out online. Corporation name, corporation address, how many employees, all that kind of stuff. It's like A, B, C, D, E, F. Just answer the questions. So you go into the Ontario Business Directory of Service Ontario. When you register your business, you also want to, you'll also go into Service Ontario. Well, let me go back to this properly. So you access Service Ontario, you go to the Ontario Business Registry, you register your business. You pick your trade name, you obtain what's called a master business license. All of this requires you to fill out forms, but they're all online. It is really, truly a pretty good system. It's step by step. If you're a corporation, you need to file articles of incorporation. And like for that, before you do your articles of incorporation, you want to do what's called a nuance search, which is NUANS. I think it's 50 or 75 bucks. You do a name search, and it tells you basically if the name you're choosing is available, and or if you decide to use a numbered company. So you may have to make a choice between those two. You complete your registration, you get your business number. After you register, you'll get a 9-digit business identification number, which you use for your provincial filings, etc. You'll register for your CRA program accounts, and you use the CRA business registration online, which is called BRO, and that helps you register for your GST, your payroll deductions, corporate tax, etc. Just follow all of what we talked about tonight, step by one. Step 1, 2, 3, 4, 5, 6, 7, and each site that you go to will take you step by step in terms of filling out all the applications, what the costs are. By the way, it's not terribly expensive to do. I would argue that probably for under $500, you can set up a corporation in Canada. If you feel like you're just struggling with going online and doing this, you could go through a lawyer. There's two ways to do it. I'll give you some advice on that. A lawyer would probably charge you between $1,000 and $1,500 to do all the work for you, and they'll ask you all the same questions. The other thing you could ask the lawyer is ask them if they happen to have any corporations on the shelf stored away, right? So sometimes what happens is a lawyer has set up a whole bunch of corporations, but for one reason or the other, the participant hasn't chosen to go into business. And sometimes they've got a numbered company that they've already paid for, they've already registered, and it's just a numbered company. They haven't done anything with it, and it's just in storage in their archives. And sometimes you can get that at a discount. So you say, do you happen to have any stored, incorporated companies right now, any numbered companies that you're not using that I could use? And they might say, yeah, I've got one. Well, how much would that be? You say, well, I'd give it to you for 600 bucks. And then you could then add a name to that on top of it and create the domain, etc. So that's another way of sort of getting a lawyer to do it for you, probably with not much more cost than what it would cost you yourself. But the easiest way, I wouldn't say easiest, the least expensive way is to go online and follow it step by step. And again, for any of you in the audience tonight, if you'd like, get my email or phone number, obtain that either through Frank or Young or through the chat. And I'm very happy to take you sort of step by step to give you what the step-by-step process is, to give the URLs that you need to go to, which you can pretty much easily get to from this lecture tonight. But if you don't have them, just contact me and I'll tell you exactly where to go, how to register. And again, it's just filling out forms online, using your credit card to pay your 200 bucks or your $100 for your nuance search and your registration. And you'll get by email, you'll get your registration back from the government that will say, here's your business number, et cetera, et cetera. You'll get that all online and you'll be able to start your business. So other questions?
Yes, there's a question in the chat.
Okay.
So when you have a stable job, but you want to go all in to found a tech company,
Yeah.
what aspect you need to consider, be a potential to consider to minimize risk before make the they move?
What a great question. And we'll get, in many of the other sections that we're going to get into, we're going to talk a lot about risk taking. So I'll answer this fairly succinctly, and with two words: no fear. So the number one rule in our corporation was number one, that was our number one rule, no fear. Um, so having said that, that doesn't answer your question, because your question was, how do I do this in the least risk, the least risk averse way? Um, and I'm going to answer this two ways, and you see I'm struggling a little bit, because my first answer would be go for it. That would be my answer. Go for it. Just go for it, right? That would be my initial answer. My more conservative answer would be this. There's another expression that we use, and the expression is, don't throw out the dirty water until you have the clean water. Meaning, don't leave your job until you've got your business up and running and it's looking like it's starting to produce and able to replace your current income from your current job. So, two schools of thought. You heard my first one, which is no fear, go for it. That's my first one. Now I'll answer your question, which is, how do I do that with the least amount of risk? Okay. So now you're going to get my now you're going to get my lecture on on the amount of energy required to start and run a business. And some of you are going to like this, and some of you are going to hate it. There are two types of people in the world. There are those who work to live and those who live to work. Depends on who you are. If you are like the 90% of the sane people out there that basically work to live, it's a difficult answer, because you're trying to balance, your work life with your home life. And everybody will tell you, you have to have a good balance to have a healthy life. If you're a little bit insane like me and you live more to work, and you're out of balance, but your balance is, I'd rather be just working most of the time. Sure, I'll take my time out to obviously spend time with family. It's important, obviously, and maybe to take vacation. But you are what in the old days we used to call a workaholic. Um, it depends on what you consider yourself. So I'll address it both ways. If you're a workaholic, if you live to work and you're a workaholic, the way I would do it, and you want to mitigate your risk, okay, I would keep my full-time job and I would work those extra hours. I'd work my 8 hours a day, and then I would spend the extra 8 hours a day. In other words, meaning I'm working 16 hours a day, and those extra 8 hours, I would try and run my business. So in other words, I'd spend 8 hours doing my job. I'd spend 8 hours trying to start my business at the same time. I would work weekends. I'd work evenings. I'd do whatever I can, whatever's necessary to run my business. So that would be the workaholic, live to work kind of person, is you just work 16, 17, 18 hours a day. Okay. There is a real argument out there amongst a lot of business experts that would say no matter what you do, some of your success, not necessarily all of your success. Some people will say work smart, not hard. I don't agree with that. I think you got to work smart and work hard. And I think if you're going to be in your own business, you better be prepared to work the 12 and 13 and 14 hours a day. It's just simply, the reason is that somebody else out there has the same idea as you, arguably is just as smart as you, and they're willing to work 16 hours. That's your competition. So if you don't be as smart as them, and if you don't want to work as hard as them, and if you don't want to put in the 16 hours, the chances are more likely that they're going to have success. So you may not want to hear this, but it's a hard reality. And that's the problem. That's the dedication and devotion you need to put into your business, in my opinion, to ensure success. And the reason I'm answering this, the reason I'm saying this, is the question is what do I do to mitigate risk? And in my opinion, the easiest way to mitigate risk is to work as hard as you can. And that means putting in a whole lot of extra hours. And that may mean keeping your full-time job and working Your other job is if it was full time. In other words, really working your business and your job at the same time and working 16 hours a day, maybe 7 days a week, at least to get it started. And remember, businesses are very much like an airplane. Okay, think of the analogy. When you're on the ground, you come onto the runway. That's pretty easy. You've got all your licenses to fly. You've got your registration to fly. You're ready to go. We've registered the business. We're an airplane. We're ready to go. But the hardest part of an airplane is getting up to the cruising level. That's when most accidents happen. That's when most gas is consumed. So the toughest part of a flight is getting to altitude. Okay. But interestingly enough, once you get to 30,000 feet, it's a lot easier to keep it at 30,000 feet and go up to 32 and down to 28. And also, the other tricky part is the landing, right? But if you think of the analogy of a business, it is really, really tough to get that plane off the ground and up to 30,000 feet. So think of your business. In order to get it to 30,000 feet, you may have to put in that 16 hours, 6, 7 days a week to get it to 30,000 feet. Here's the good news. Once you get it to 30,000 feet, it's a lot easier to keep it there. But again, you don't want to become complacent either, and just take your foot off the gas, and all of a sudden that plane crashes, right? So you don't want to be complacent either. So the answer to your question is is that if you want to mitigate risk, you have to just work smarter, harder, longer hours until you get your business to 30,000 feet. One other story I'll tell you, well-known story. And I'm not advocating for Elon Musk in any which way. You can like him, you can hate him, it doesn't matter. I'm just looking at his behavior and personality as a business owner. This guy works 24 hours a day, 7 days a week. A lot of you don't know that. He'll tell you that the worst 2 weeks in his life were the only 2 weeks he ever took a vacation. And he'll tell you that during those 2 weeks, whatever business he was working on at the time had literally a fatal catastrophic event happen. And he basically, after doing this the second time, said, I'm never taking vacation again. Now that's crazy. That's insane. But you look at his success. So do you want a life where you have basically it's all work, no play, no family? That's a choice you make. You can have that, but you go to work 24 hours a day, be the smartest guy in the world, and not take a vacation. That's the extreme on one end. The extreme on the other end is expecting to work 4 hours a day and beat out the competition working 4 days a week. There are people, by the way, there are people who do it. I always say, remember the 80-20 rule. 20% of people will always defeat whatever I'm going to say. But you're going to likely be part of that 80% who doesn't defeat what I say. And if you're part of that 80%, remember that person who works 4 hours a day for 4 days a week, chances are they're not going to beat out their competition who's working 12 or 13 hours a day, 6 days a week, and is just as smart as you. So I hope that answers your question. And I'm sorry to be so lengthy in these answers, but I think it's really important that people understand the full story, and I don't just give you a piece of the story.
Thank
So
you
other
very much,
questions?
Martin.
Yeah. Other questions or comments?
Yeah. So add on to that question, I'll ask you a question. In our lifetime, do you see their optimal time window to start your own business?
So let me just I'm not quite understanding the question. So you're saying something. So in
Your
any
lifetime,
sorry, in
you see
anyone's
like
lifetime
20s, 30s, 40s, 50s?
or what's the optimum age to start a business?
Yeah, time window. Yeah.
Well, let me give you quickly my story. I started August 1st, 1975. I was 19 years old. So that's when I started my business. And I was in my business and I sold it to the largest private equity firm called Warburg Pincus in New York, which is Wall Street, in 2011, and retired 2013. Of course, I still am active. Engaged in consulting and mentoring early stage companies. And I have a few different interests in companies going right now. But at the end of the day, I started when I was 19. So that's my story. I would argue probably the follow-up question to this is going to be education. Do you stay in university? Do you get fully educated or go into business? That might be a follow-up question to what I'm going to answer. So I'll already ask the next question to my answer. But my answer would be is this. One of the guys who I got to know over a period of time, and quite frankly, his name has escaped me, so I apologize for that. But what I can tell you is it was an elderly guy in his 70s who ran a mutual fund called Finsco, Finsco, back in like literally in the 70s, early 80s. It was a mutual fund, one of the very first mutual funds. It was called Finsco. And he had a very interesting philosophy of life. And so I'll share that with you, and it might help answer the question. Okay. His question or his answer to that was that between the stages of 20 years old to 40 years old, that's when you make all of your mistakes. You learn and educate at an exponential kind of level. You have all of your pitfalls, all of the downsides. You get beat up. It is just an era of learning, total learning between the ages of 20 and 40. He then went on to say between the ages of 40 and 60, you take all of the knowledge and the wisdom and the mistakes and the failures that you learned between 20 and 40, and you execute on perfecting them between the ages of 40 and 60. And if you're lucky enough and you've made enough money by age 60, between 60 and onward, you get to celebrate and enjoy the fruits of your labor. So that was his thoughts. And he was a pretty wise guy. So he was 20 to 40, learn everything. Maybe you work for somebody, maybe you try and start your own business. But by age 40 would probably be the optimal time to really look at either a very senior level position in a company or starting your own company or becoming a partner or opening a corporation. So his thought would be age 40, you are probably around that time would be the time that you have the most amount of experience, yet you're still young enough to take advantage of all that experience and have the energy to build a sizable corporation. Now, that question can be answered 1,000 different ways. I think realistically, the way I would answer it, it is totally dependent on the person. It almost sounds a little bit like uh, a lame answer, but I really believe it totally dependent on the person, and dependent on the person's personality and the resultant behavior of that person. I remember personalities and behavior are two very different things. You cannot change your personality. You can modify your behavior. That would be a great session. Once we get through, this is for young. Once we get through, the 12th module on this one of these days, I'd love to do a session on personality versus behavior. And it could relate to business, but it also relates to life in general. That would be a wonderful discussion to have with you guys. I think it'd be longer than an hour, though, to have that one. It could be 3 or 4 hours, maybe 2 sessions. So you can't change personalities, you can change behavior. If you are inclined at a very young age and you have a burning desire to work in a business and be a business owner, I think you have some sense of that by the time you're getting into your 18, 19, 20 years old, and that might be the time to execute. Other than that, I think if you're just the average person out there, maybe you do need a little bit of experience first in your 20s, maybe even your 30s, and maybe 40 is the optimum time to start. But having said that, I think it solely depends on your personality and your behavior. And I think there are some people I would advise them right away at 19, 20 years old, getting your own business. And many, many people have, and many other people wait to get in their own business until their 60s. And there's some great stories of people who had great success that started their businesses when they were 60 and 70 years old. So I'm not sure I can answer that more than to tell you it's dependent on your personality and your behavior. Let that be your guide. Trust your inner voice, trust your intuition, and trust your intuitive nature. Trust that voice from within you. Running a business is something that comes from inside. It's this burning desire Um, it's a burning desire for success. And usually, if you're thinking about starting your business because it's you want to do it because of money, I would probably tell you don't start the business. And you're all probably in shock right now that I said that. But successful people don't start businesses to make money. They start businesses because they have a mission in life. There's something that they really want to do. Money happens to be just an effect. It's something that happens as a result of doing something you really want to do. The other last thing I'll tell you, and this is actually a good point. We're getting a little bit off of the subject tonight, but it leads to it based on the question. A lot of people will say, you'll hear the expression, oh, you should always go, find something that you love to do, right? And go into that and create a business. And for, I don't know, 65 years of my life or 60 years of my life, I believed that. I believed, and I would advise people, find something you love and go into it and go into a business. And now today, this 60 odd years later, I would tell you it's not entirely true. And here's what I would tell you. Sometimes you gotta just start. And sometimes you can go into a business that you think something you think you hate, right? You can go into some crazy business, right? And it could be taking cutting lawns, okay? It could be being a gardener, okay, and selling your gardening service to going around to homes and say, hey, I can cut your lawn, I can cut your lawn. And you'd think of it initially to say, God, I hate cutting grass. But what you learn by forcing yourself to go into the lawn business is you begin to learn something. You begin to all of a sudden enjoy the lawn business because what you didn't understand when you went into the lawn business that, hey, by being in this business, I'm learning about sales and I'm getting to meet customers. I'm going home to home to home. I'm really enjoying knocking on doors and getting to meet this community of people. And all of a sudden, then I show up at the community event. Everybody knows me. I'm the lawn cutting guy. I'm learning how to run the business. I'm learning about machinery. And all of a sudden, something that you thought you would hate, you learn to love because you threw yourself into it and you began to realize all the things about the business that you weren't thinking about, and you end up actually loving the business, even though you thought you never would. So sometimes when you're young, in particular, in your 20s, and you're looking to go into business and you use as an excuse, I'm not going to go into the business because I don't love it. Today, 20 years ago, I would have said, you're right. Today, I would call it an excuse. I would say, you hate the business, but it's an opportunity. I would say go into it and learn somehow. You will learn probably to love it because you'll have started. Otherwise, you might wait for the rest of your life to start a business because you're looking for the perfect opportunity that you love. Sometimes you just got to throw yourself into something and you'll be surprised at how quickly you learn to love that business. So I'm a new advisor when it comes to actually starting your own business from the perspective of having to do something you love. I believe you can also start with something that you don't love and learn to love it. So next question or comment.
Yeah, that's a question in the chat. Thank you. Do you see the online business some more profitable taxable than other business models?
So is the online business a better route to go than a non-online business?
That's what I think. Yeah. Sarah, if you want to clarify.
Yes, correct, Martin. You got it.
Okay, so are you better to go into something that's an online business or something that's not? Well, the direct answer to that is it depends on the business, right? That's the first and foremost thing. But if you're looking just generally overall today, look, the online business is very saturated. There's no question about it. Having said that, there's just a ton of opportunity. Like there's never in my lifetime have I seen more opportunity? And people will say, "Oh, AI is going to kill jobs." So the answer to your question is it depends. I'll tell you what I look more carefully at. In looking at an opportunity today, whether it's online or not, the most important question, I think the most important question you have to ask yourself is this a business that's going to disrupt an industry? Disruption is the key word. Am I going to do something to disrupt, that's being done? In other words, today, we go out and I can't think of a really great example, but today I go out and, in the wintertime, I take a shovel and I shovel the snow off my driveway, right? And there are all kinds of companies that come around and they plow your driveways. And this might be a good example. So they plow your driveways and you pay a set fee for them each time they come, or you pay an annual contract, or you pay the kid next door to come in. So the snow plowing business has been around forever. It really hasn't changed all that much. But imagine you developed something that either, and they're out there, by the way, something that either for next to nothing, very inexpensively, something that you can put down on the pavement or underneath the pavement before you pave, or let's say after a snowfall, where you have this magic dust, magic petals, whatever they might be, where you can just cast them out and magically all the snow disappears without doing any harm, because of salt and things like that, without doing any harm to the pavement. In other words, it's like a magic powder that you just throw out there, and an hour later, all the snow is gone, and it does it without any harm to the environment, without any harm to the pavement. That would be a disruptor, right, to the snow plowing business, right? So something like that. And the question would be would that be an online business? Would that be a reseller business? It's tough to say, because you could make that an online business where people are just buying the powder and doing it themselves. You could also make it a reseller business where it's a product that's sold in the marketplace, and you could you could have resellers just reselling it, to the community. So there's 101 ways to answer your question. But I would say that the internet business, the online business, is arguably it is very saturated on one hand. On the other, I think there's a lot of opportunities. So I think there is equally in things that aren't online. I would also argue, just like the snow plowing business, that there's a tremendous number of opportunities. It's just a question of sitting down, thinking about looking at processes, both online and offline, looking at processes and saying, what do you think I could do? Is there a smarter way to do this? And if there is, investigate it, research it, maybe find a partner who's got a solution and say, hey, you know what? I see you've invented this powder and I have a real ability to sell. What about creating a partnership? And maybe we'll sell it online, but at the same time, maybe we'll sell it door to door. It's a combination of online and non-online. I think it's more important about finding a disruptor than it is. I would say that the internet, an online business, it isn't the business. I would say it's a tool. And I'd answer the question by saying I think it's the wrong way to look at things. I think whether you use things online or whether you go into an online business or whether you go into something that's not online, I think both of those are just the tools. I think it's the business itself that's the important thing. And the most important thing to me in a business is that it's some kind of a disruptor. It gives a new way of thinking. They always say, faster, quicker, faster, quicker, better, right? Something you can do, faster, better, cheaper, right? So if you can do something faster and you can do it in a better way and you can do it cheaper. So competition is always looking to do things faster, better, cheaper. And I would say if you can find the disruptor, use online and offline, I would do both. I will make a comment here only because I've mentioned AI a few times. I think it's really important that probably this get mentioned in every module that we do, just so everybody understands this. And I'm sure there are many of you that do, but for the ones that don't, there are 3 levels of AI. There's AI, AGI, and ASI. AI is artificial intelligence. It's what you've heard about. It's what you see. It's what Apple has with its new release of Apple Intelligence. It's OpenAI. It's Grok. It's all the AIs that you know about. When you go online, use ChatGPT, that's AI, right? So that is AI that is arguably incredibly smart, great machine learning, built algorithms, but not quite as smart as a human being. That's what we call AI. AGI, which is probably about where we're approaching or might be there now, is where it's called artificial general intelligence. That means AGI is at the same level, comparable level to the human being. It can do just about anything and everything equal to a human being. The level up from that, which we're not at right now, is something called ASI, which is artificial superintelligence. That's probably where we used to think that might be 10 or 15 years away. My argument right now would be it's probably 3 to 5 years away. And that's when ASI can do things better than we can. And we will have the voice automation. We will have neurolinguistic recognition of speech. So it understands intuition. It understands, it will understand speech from a human perspective and be able to dissect exactly when someone says a word, because you know when you say a word, it can mean 1,000 different things. So when we get to ASI will understand what that different thing is, right? So we're in the cusp right now of just approaching AGI. It is going to replace a lot of the lower level jobs. At the same time, it is going to create so much opportunity for so many people if you just think about how to use it. That's the key. Sit down, research, I pick up a cup of tea right now. Think about, okay, how I made the tea. I put a bag in there. Is there a way to disrupt the industry? Is there a way to, make tea in a different way? I don't know. I don't know the answers to all these questions. What I do know is opportunity is knocking out there. There's 101 ways to find it. Think of ways in which you can disrupt things, whether it's building a home, whether it's making a door, whether it's snow plowing, whether it's cutting a lawn. All of these things are things that you need to think about. But I don't think the choice is necessarily between online and not online. I don't think they're mutually exclusive to begin with, because I think any product that's not an online product still needs an online presence. And I think even the things that are online to some degree still need an offline presence. So I'm not sure that they're mutually exclusive. And I think in many cases, they're actually can be one and the same. Other questions, comments?
Can I ask one question?
Sorry, you broke up a little bit.
Hello?
Yeah, I can hear you.
Can I ask a question?
Yes.
So after company registration, a professional accountant is a must for this new startup company?
Yes. So what I understood, all I heard from you is after you, if you're an accountant and you're starting your own company, was that what you were asking?
Yeah, do I need to hire a professional accountant at the very beginning of a company?
Okay, so if you start your own company, do you need, is it is a requirement to hire an accountant? Is that what you're asking?
Yeah.
No, absolutely not. You have an option. It depends what type of company, by the way. But you definitely have the option of of filing your own taxes, of doing your own T2, et cetera, et cetera. You have the option of filing your own. Now, you might run into problems if CRA sees that things aren't filled out correctly and sees that you're not an accountant, but you have the right to file your own forms and do things your own way. In fact, um, in fact, CRA has started. I know they've done it in the United States. Had it for a few years now, but I believe CRA has actually started now for certain individuals where they actually have the software where you can go on to CRA and file your taxes directly with them now. And they actually have the taxes. And as I said earlier, watch what happens when AGI and ASI come around. It's going to have a huge impact on the accounting profession and the legal profession, because my best guess is that CRA and IRS are going to offer a software package that will allow any business to file directly with them by simply answering the questions that CRA and IRS will ask, and you'll be able to file directly with them without ever having an accountant or a lawyer involved in your process. So, to the best of my knowledge, I'm answering you correctly that you do have the right to file your own taxes without necessarily having an accountant. An accountant helps you really in two ways, as I mentioned earlier. It's compliance, right? Making sure you're in compliance. And the second thing, it's in tax savings. So often we think we're saving money by not using an accountant. And I would argue that if you have a good accountant, chances are they can offer enough advice on compliance, as well as, in particular, more so, enough tax advice that probably what they save you in taxes would be far greater than what you'll save by trying to do your taxes on your own. So if you have a good accountant, they should, what I'm trying to say, if you have a good accountant, they should earn their bill to you. Whatever they're charging you, they should probably end up saving you more in taxes than what they charge you. That's a good accountant. Does that help answer your question?
Yeah, thank you.
No, thank you.
Sorry, I have a little one here.
That's okay. Other
Is there any
questions?
questions? Yeah.
Hello, Dada, Dada.
I cannot open my mic.
So do we have any other questions, comments? Anything in chat, Frank, that we didn't answer?
We answered all of them. Yeah.
We answered all of them. Okay. Are there any other questions of anybody on the online? Okay. I think probably we've been an hour and a half. Interestingly enough, I thought this session would be 20 minutes. So I always laugh. I always think that these things will be shorter than they are. And I know a lot of it is just because I'm providing lengthy answers,
Just
but
want to thank you,
yeah.
Martin.
Oh,
I
my.
told people, if you have real questions, you'll know how good Martin is. Yeah, yeah. Thank you
Well,
so
the answers
much.
tend to be lengthy, but for a reason and by purpose. Is I'm trying to really give you a full and complete answer so that you could hear it from a variety of perspectives. I can give you my opinion, but my opinion on itself is just my opinion. I'd rather try and give you an array of opinions so that you can form your own. And that's really the reason that I tend to lengthen the answers so that you can get a different viewpoint. I try to give you different viewpoints so you can make your own decisions going forward.
Oh, it's wonderful. Even I'm not running business, but listen to you and I thought, oh, that's very thorough, very interesting. Yeah,
Well, my
so
pleasure.
insightful.
Yeah.
Thank you.
So just to mention, I did at the very beginning say that we would start to talk about, some of the business strategies sort of as a prelude. I think what we'll do is we'll now leave those to the next talk because we've already been just a little over an hour and a half. So
Taking a lot
I'll
of
leave it to the next
time.
talk,
Yeah.
which, by the way, just to remind everybody online that the next lecture is business planning and strategy. It's a topic I love. I was going to start it tonight, but I won't because of time. But I'll promise you this: I'll make sure that we get it all in the next section, and it'll be a fun one because
I'm sorry, I haven't checked it. I listened. I was absorbed to your lecture. I forgot to check the day.
that's okay.
November, the
Yeah,
second
you'll send out a
Wednesday.
notice. Yeah, I think you said it's the second Wednesday in November.
Yes, second Wednesday in November,
All right.
the
So
next
just
session.
take a, yeah. So if I take a, I don't know if I can find this real quickly, but
It's in the email. It's in the email. I saw it. Yeah.
November
November.
12th, I think. Yeah. Yeah, I think it's
November?
November 12th. Yeah.
November 12th. Oh,
Yeah. So
okay.
the next lecture will be November 12th, and we will be talking about business planning and strategy. And the key word to me there is strategy, because that's what I really, really love to talk about. It's understanding and having a strategy to go forward to start your business, and the types of things you need to do to start a business, and create stickiness, and using things like denial and binary marketing and bundling and viral usage, all that kind of stuff. That's all my fun stuff. All these business strategies, and we will talk about them on the second Wednesday in November. I'll be delighted to attend that and talk about business planning and strategy, and we'll go on from there. And then in the new year, we'll do lecture 5 through 12. We'll try to get 3 or 4 of them in. I guess we're trying to get in 4 a year, so we'll get in 5 through 8 in 2026. And hopefully, if I'm still around in 2027, we'll get lecture 9 through 12 done and complete this thing. And maybe one day we'll do that personality versus behavior lecture, because that's a doozy. That one, you guys, we'll have a lot of fun with that one. So with that, I just thank you all for attending tonight. It's been my pleasure and privilege. You're a wonderful group of people. Anything I can do and help support anybody, I'm delighted to. If anyone wants to touch base with me individually, I'm also happy to give whatever time I do have available in trying to help you to be as successful in starting and your own business and running it to become a great success.
For inquiries, please contact info@eawlc.org or visit our website at www.eawlc.org.